All right, we are live. New office. Who dis? We've got the same field with the same sign. Camera angles are still being worked on, but I'm in a brand new office. Anybody who's local to Northern California and Sacramento, I think we'll put together not another grand opening because we just did that the end of when was it? End of 21. But I'll do for sure some sort of event here in February of 2023 just to check out the new digs because they are sweet. Merry Christmas to anybody who's watching. Didn't expect a lot of people to be on, but if you are on watching live, fire off questions in the comments. I love doing live Q&A. And part of the reason why I'm on a day that some would say, oh, there's an observed holiday, a lot of the lenders are closed, title companies are closed, is because I like to be consistent, right? I'm consistently going to show up 3 p.m. Pacific Standard Time to answer questions live. I'm consistently going to show up for real estate agent partners. I'm going to consistently show up for clients, giving best-in-class client experience. And so here I am. Even if this one ends up being shorter than normal, I'm going to be here talking about jumbo loans. Exciting stuff to happen in the jumbo loan space. And I've got a video coming out tomorrow about that. What buyers are doing right now in the first quarter of 2023, which I think will help other folks looking to buy get an idea of how you might want to think about structuring your loans, some questions you might want to ask to your real estate agent partner and your lending partners, no matter who those are. If you're looking to get pre-approved, you know the best place to do that. You just go to greatmortgagebroker.com. You fill out the quick and easy form. We'll be in touch. A lot of you guys, 200 plus a month have been reaching out through that link, greatmortgagebroker.com. We appreciate it. Hopefully, I continue to keep getting raving reviews. Your team was great. They answered all my questions, all those good things. Hello to you, Kevin, in Lakeland, Florida. Let me know, how is the sound? I got my camera in a weird spot. This has probably got to change. I've got the same microphone, so the sound should be good. But rest assured, as we get dialed into the new office, these things are going to, get cleared up and squared away. As far as mortgage news goes, not a lot of action, right? Like I said, title companies are closed today. A lot of lenders are closed today. The markets are closed today. So you won't see anything happening in the world of mortgage and mortgage rates today on Monday. But, it probably is a good, I don't know what you want to call it. Mortgage interest rates, in my opinion, are going to be relatively flat and stable for the next 30 to 60 days. So even on the day that markets are open, I wouldn't expect a lot of volatility. Great question, Olivia. Again, if you're joining this live, fire off whatever questions you have. I love answering these. These are helpful for not just the person answering or asking the question, but for anybody else watching, whether it's live or whether it's on replay. Keep firing these questions off because you get real time, real advice from a real guy doing loans every single day, in my opinion, doing it at a high level. And I'm here to offer the free advice. Happy to help. I love this stuff. So Olivia, thank you for joining. Thanks for asking the question. I appreciate you. And here it is. I'm newly engaged. We want to buy next year, but a student loan debt of $50,000 with an auto payment of $600 a month for one person cause an issue with getting approved as a couple. Well, the way mortgage lending works, and I'll start there, is that if you're applying as a couple, we're taking the income as a couple versus the debts as a couple. So collectively, between the two of you guys, you make $147,000 per year, right? And take that $147,000, divide it by 12 months, whatever that number ends up being, 12,000 and some change as a monthly income number. And then your debts, some credit card debt, maybe a car payment, his debts, $50,000 in student loans and a $600 car, collectively, whatever that number is, $1,355 in debt, plus whatever the new mortgage payment is going to be. And that's where the debt to income ratio equation comes into play. For anybody who's watching and doesn't understand how that works, your debt to income ratio consists of two parts: front end ratio and back end ratio. The front end ratio is that 12,000 income I just talked about collectively between Olivia and her boyfriend, soon to be husband, fiance, and the mortgage payment. If the mortgage payment is $4,000 and the income is $12,000, that's a front end ratio of 33%, because that $4,000 makes up 33% of the income. Then what you have to do is you have to add in all these other debts and student loans, car payments, credit card minimums, all the other things. And then all those debts plus the mortgage versus the income is the back end ratio. So in this example where 12,000 is the monthly income, if you've got, I got to make this easy on my head. If you've got 4,800, 5,800 between the mortgage and all the other debts, then you've got a back end ratio of roughly 48%. I was trying to do some quick math. 6,000 would be 50%, right? So 5,800 would be slightly less, 49%. And in general, different loan programs are going to have different DTI requirements. Some cap at 43 on the back end, some are 45, some are 50. Some of the government products, like FHA, will allow you to go up to 57 on the back end. So with all that being considered, as long as what the partner that's got this debt load is contributing on the income side outweighs it, right? Like if, for example, Olivia, if you've got, let's say you've got 6,000 income and your partner's got 4,000 income, but versus that 4,000 income, they've got 2,200 in debts. It might be best to leave them off if you've got no debt and 6,000 in income, because it might help your debt to income equation. Student loan debt of 50,000, depending on what program you use and what automated underwriting we're jamming it through, it's going to be 1% or 0.5% of that student loan debt that we take into account for a payment. Or you might already be in payment plans where we see what the payment is. But we're talking $250 to $500 a month for that student loan debt. And then we're talking about a $600 a month car payment. As long as that person's making $2,000, $2,500 plus, it's not going to be an issue, right? Having some debt is normal. A lot of people qualify for mortgages with debt, where sometimes people run into trouble with multiple borrowers. Is one borrower might have an 800 credit score, the other one's got a 652. When you have more than one borrower, you've got to use the lower of the two scores. And so if the person with a 652 score isn't contributing a bunch on the income side, we don't need the income, then maybe we leave that person off and we get better terms for our loan based on the higher credit score. Hopefully that was helpful, Olivia. At the end of the day, all of these questions get answered with a pre-approval. I highly, highly recommend folks to get pre-approved with a lender that they like and that they trust. Of course, working with us is something I recommend, but if you don't work with us, no big deal. If you don't go to greatmortgagebroker.com and fill out the form and connect with some of the best loan officers in the world, all good. You can get pre-approved somewhere else, but get pre-approved. If you guys are thinking about buying a house anytime in the next 3 or 6 months, go through that process. Online application in most cases, uploading supporting docs like your W-2s, your ID, your last 2 months of your bank statements, and getting your credit pulled. All these things might seem like, man, I don't want to take the time, or that took, me an hour and a half to find these 4 different documents, get them scanned, get them uploaded. It's a little bit of work, well worth it. Well worth it no matter what the outcome is. If the outcome is, listen, one of you guys has a 652 credit score, we want to get you up to a 680. Or it's, hey, this might look better and be structured better if we just use one of the incomes. with the borrower who makes $8,000 a month and has a 785. You guys can both still hold title, both still be owners, but maybe it goes in this person's name. Or there might be something that shows up on either borrower that we can improve the credit, improve how the debt is structured, improve something else to where it's going to look better for you in a month or 60 days or 90 days. All these things, you can't get these answers, and you can't make progress or better until you do the pre-approval. And so many people wait until the house comes up to rush through this stuff. You don't want to rush through this. You want to be pre-approved well in advance. You want to be shown your options well in advance. You want to understand not just the pre-approval process, but the loan process, the different options you have and what those look like, 3% versus 5%, 450 versus 500, what the payment's going to look like, what your total cash to close is going to look like. All this stuff, our big mantra on my team is empower people through education. We want to educate you. Good lenders want you to be very comfortable. We're going to be transparent with exactly how it's going to look from a financial standpoint. We're going to hand that to you and allow you to go out there and make decisions based on what you know, not based on emotion and other things that can get you into trouble. So glad that was helpful. Best of luck to you, Olivia. Look into a pre-approval. Like I said, whether it's with us or with somebody else, all good, but it's definitely something you want to do if buying is in your future. Joey Garessi, what's up, my friend? Merry Christmas, happy holidays to you. I just was thinking about you earlier today, actually, because I was looking at the Kings schedule for January, and I saw your boys from OKC on there. I don't know what's going on with my buddy Sabonis. I don't know if Sabonis is going to be out at all, if he's going to be out and require surgery, but that is going to be big for our Sacramento Kings. I don't know if you saw, Joey, my buddy Matt Ishbia is buying the Phoenix Suns. So lifelong Kings fan. I'm always going to root for the Kings. And it sucks that Matty had to buy somebody who's in the Pacific Division. But Matt Ishbia, owner, CEO of UWM, the wholesale lender where many brokers broker business to. They wrote $245 billion worth of mortgages in 2021. So they're a big player, number one lender in the U.S. He's buying the Phoenix Suns. And their, is it Phoenix Mercury, their WNBA team? He's just a winner. He's built to win. So it's going to be exciting to watch that team win, that culture win, that, the whole organization from top to bottom, the dude wins. In the mortgage industry at UWM, I have no doubt same stuff's going to happen for the Phoenix Suns, even though I'm going to root against them when they play my Kings. So keep the questions coming, please. I want to answer them. One thing that's going to come out tomorrow, and I love to kind of tease it in the live because it's always my goal to provide not just mortgage information and timely news on mortgage, but what's going on in the mortgage market and the things that are like the most popular, the most used. Active originator, actively doing loans, managing a team who actively does loans. So we're talking to borrowers, we're talking to real estate agents, we're talking to boots on the ground every single day. So we have an idea of what's going on. The 2-1 buy down, we just had another conversation about it this morning, is by far the hottest mortgage product with good reason, because it's the best option for a lot of people who are buying. Watch is talking to me. A lot of people who are buying their primary residence in this Q4 of 22 or Q1 of 23 for sure. This is probably going to be the hottest mortgage product of 2023. But I bring up the 2-1 buy down, not because I want to rehash all the stuff I've said. I've got multiple videos on this channel about the 2-1 buy down, the benefits of it, how it's structured, what you need to know. My video tomorrow is going to be the newest product and the greatest thing to hit jumbo since shrimp, and that is the buy down in the jumbo space. if you are buying and you're going to use a jumbo loan, I think the 2-1 buy down is going to be your best option. Now, if you can't get enough credit to do a 2-1 buy down, you could do a 1-0 buy down. But just for some context, and maybe I'll bring it up because I think that people, they do best with examples. If you're buying something for 1.5 million and you're putting 20% down, with rates being up, like it's expensive. Taxes, insurance, principal, interest, all in, you've got a $92.86, almost a $9,300 a month payment. That's a lot to buy it off for even my most well-qualified clients, right? Senior engineers at Google and Facebook, or doctors, physicians, nurses. Like, no matter what your income level is, a mortgage that's approaching $10,000 a month, it's a big dog, right? And so those who believe that mortgage rates are going to go down in the future, those who understand that sellers are in a position where they're willing and able to give credits to the buyer for whatever the buyer wants to use those credits for, as long as they can sell their house, sellers are willing to do it. This 2-1 buy down makes sense. It makes a lot of sense in the jumbo world. Let me show you what this means. Let me do a little bit of zoomy. So I'm going to show you what it means on the scenario I just talked about, which is 1.5 million, 20% down. This is not an offer to lend. This is something I was doing on Friday, a little scenario. And so I just want to show it. In this case, 1.5 million purchase price. You need 27,141 in credit from the seller to do this 2-1 buy down. And this is what you're going to be able to do. This is how you're going to be able to structure this bad boy. Year one, have a payment of not $92.86, but a payment of $77.91. Because that payment is based on, oh, you know what? This is 4,375, 5,375, 6,375. I might have said something different earlier, but I've been looking at a lot of these. Trust me, a lot of buy down scenarios. 77.91, year two, 85.20, and then years 3 through 30, 92.86. A couple of good things to mention. 22,141 is the seller subsidy required, seller credit, whatever you want to call it. If for some reason you get in this loan and after 12 months, rates are down at 4.99 for a 30-year fixed, you say, hey, I want to refinance it to a 4.99. Whatever's left from this seller subsidy, it might be 10 grand after the first year. If you refinance, you get that refunded back to you. It's sitting in that escrow account. You get that applied towards principal. If you don't, this 30-year fixed at 6%, 6.25%, 6.375, whatever it ends up being, when you buy, is what it is years 3 through 30. The difference, Joey, with the ARM is you get into an ARM, and whether it's a 3-year fixed, a 5-year fixed, once you're out of it, dude, like sky's the limit. Some of these HELOCs that people were like, oh, these HELOC rates are great. They're in the 8s and the 9s now because they're adjusting. And so by doing it this way, you don't have any of that upside risk to adjust to 8, 9, 10%. You're literally capped at whatever this 3 through 30 rate is. And for a lot of folks, they're of the mindset that like somewhere here in months 6 through 24, they're going to be able to refinance. If they don't, which could be possible, right? Then they're here. If you can't refinance and you're in a 5-year ARM that starts adjusting and it goes up to 10%, you are in a world of hurt when you owe over $1 million. So I think that's why some people might shy away from ARMs, Joey. There's certainly some circumstances where a 5, 7, 10-year ARM makes sense. I haven't priced one this morning, but I will. They're not as good as you would think, right? they're just not that much better than the 30-year fix. Certainly not better to the extent that these ones are better in the first 2 years. This is a lot of savings being pushed into year 1 and 2, all coming from a seller subsidy. So it's not like it's the buyer shoving all this into the first couple of years. It's actually the seller subsidizing it. And so I think these are going to be a really popular product come next year for those who are upsizing, getting into the jumbo loan space, which shoot in some markets, man, is you got to have a loan over 1.1 just to be considered jumbo. So that's that. We shall see. If anybody in the comments has any experiences with the 2-1 buy downs, any comments, suggestions, let me know. I've got a lot of unpacking to do in this new office, so I think I'm going to cut it short this week. But for consistency's sake, staying on, right? Mondays at 3 p.m. Pacific Standard Time. You know what? That's something I'm going to do on the YouTube community page. I'm going to ask what the best time would be, because I can really do this anytime during the week, and it doesn't matter as much to me. I'm in here 50 hours a week doing what I can do to help consumers win. So whether 3 p.m. on Mondays work or 4 p.m. on Tuesdays, as long as it doesn't interfere with the kiddos' basketball schedule or the Wheel of Fortune with wifey, it's all good with me. But not any more questions. I'm going to get to moving some stuff. Leave questions in the comments down below, even after this thing has been published and it's just sitting there on YouTube for the world to see. I'm still going in there trying to answer as many questions as I can. Appreciate you guys stopping by. Appreciate the questions. I'm going to throw that out there as far as time and day of the week, because I'm open for suggestions. But I'm going to continue to go live every single week, answer as many questions as I can for folks, because I think it's valuable. There's a lot of information on the internet. Not all of it's true. Not all of it has your best intentions. And that's my gig, right? From the very start, even when I wasn't licensed to do loans nationwide like we can now, I was giving people best advice I could based on everything I know and based on just working with borrowers day in and day out. So that's what you'll continue to get here. If you have any suggestions or things you want to see, feel free to let me know. Until next time, we go and see. Thanks for watching, guys. Have a great one. Merry Christmas, Happy New Year, all that good stuff. I guess next time I go live, it might be 2023, unless I just do a surprise one later in the week. Thanks, guys.